Okay, so let's talk about the metals. So I want to talk about the website first here and just some different looks that we have. I actually have a mobile section here at the top. So if you're going to visit this website on a mobile device, the only thing you're going to see are these links. And the reason is that these links will take you out to bigger presentations. So if you want to see like the Fed juice and the charts, you can click that and it will open it up for you as a separate presentation like that. So that way you can see it on your phone. But if you're coming to this on a browser, you can go down here to where it says WolfTrader Futures Metals Service Fed Use Charts, and you'll start to see the charts here. So I'm going to talk to you about how I interpret the charts and how I get a signal. First of all, if you click the next slide here, you're going to see I put up the same concept that you would see in the closing bell. So this is what you would see on the gold service, but this is just for metals. So the idea here is that I list everything out, and I'm really looking for the tape here, which is the Fed juice. That is the most important part. And I'm trying to get an alignment with the tape, which is the Fed juice, and some type of a cycle. Okay, the cat signal. In the case of the metals, the cat signal was doing very well. So when they're together, I try to give an advantage. And when you get an advantage, you'll see it here. It'll say up or down or whatever it is. It'll actually say where the advantage is. So right now, there's just no advantage on these because everything is kind of mixed up right now. So I'll show you on the next chart why that's the case. So this is copper here. So if you go to a chart like this, what you'll see is you'll see the chart here, and then you'll see the Fed juice here, which was the buy on 520. There was actually a little wobble into here, which I corrected for, but for the most part, the Fed juice has been in a buy the whole time since May the 20th. So one of the things I want to talk about first is the concept of a standalone. So standalone means that you are just looking at the Fed juice alone as a single trade. Okay, so that's the first thing I want to emphasize, that the Fed juice is a standalone indicator. It's optimized to stand on its own 2 feet without any influence from astrology, cycles, statistics. It stands on its own. It's a standalone system. So for example, if you just took this long boat on the copper, you can see here that on the 18th it was a sell, the 20th it was a buy, right? And it stays in this buy signal all the way through the rally until 8.3. It did one day here where it flipped back and forth and then it went back into a buy. Okay. So the point is that even though it did fall down into here, it did catch this big run into here. So this Fed juice, like I said, is, to me, this is the most important thing to align on a trade, on a position. I always try to be with the Fed. So if I use the term advantage, most of the time, I would say 99% of the time, I'm talking about a Fed advantage. So I always want to look first to see what the Fed is doing, and then I want to look to put the cycle with it. Okay. So there's a whole bunch of information here that I'm giving, and I know it can look kind of complex, but the point is it's actually very simple. The first thing we look at is the Fed. So, and this is optimized. This one is going to be re-optimized on August the 20th. But the reason why, if you look back here, you see it looks like it went into sells and buys in the past here. That doesn't really matter because it was re-optimized here, and the past doesn't matter. It only matters going forward. So the only thing that matters on the chart is when you see these arrows like this. Those are the actual signals as they occurred, and they're stamped on the chart. They're time stamped on the chart. So every time I optimize it, the past is going to look different. It doesn't matter. It's optimizing for the future to go for about a month. So just so you know that. So first of all, the concept of the standalone, that's a really important concept. And let's look at silver here. So here again, here's another one here. If you just looked at the Fed juice here, standalone, you had a sell on the 23rd of April, a buy on the 13th of May, a sell on the 1st of June, a buy on the 3rd of June, sell on the 4th of June. So you can see this thing bouncing around like this. It had a sell into here. I don't know why that says 615. That should have been, that actually happened on the 16th. That should say 16 there. But this is how it happened. This is how it actually unfolded. And then it stayed in a buy. It's still in a buy. Okay, so it stayed in this buy for a long time. You can see that. So again, standalone system, Fed juice. Okay, most important thing in my opinion. So that's the idea there. Now, why did I have a preferred upside on gold and silver? So this is very simple. The next thing that I look at, so that's the tape. Tape is the Fed juice. That's the Fed. Okay. The next thing I want to look at is something else to go with it. Okay. So something else to go with the Fed that I think is going to give me the strongest portion of that move. Okay. So if you look here, if we look down here, you can see that you have the cat down here. Okay. So from here to here, from the 17th to the 24th, the cat signal was in a buy. Okay. So the cat was up and the Fed juice was also up during that time. So from here to here, this was the time when the cat and the Fed juice agreed. Okay. And the cat, by the way, was trading well enough just to trade it by itself in this time. You can see that it picked these moves up beautifully. This was all put out ahead of time, you guys. So this stuff is all in the charts. I did pull out this one position here. I got out a little early on the silver because I wasn't sure about the dollar and I thought the dollar might be bottoming. But once I got my trending indicators in line, like the Wheel of Fortune into here, and I got these trending models to go along with the Fed juice, I felt way more comfortable here on the 29th when this went into a buy, the cat, that this was going with the Fed juice again. And so that's why I had this move into here. Now, the problem with taking a cycle like the cat is that sometimes they can be plus or minus a day. So these, and I've gone back and forth with this. It's really tough to call. There's an orb in there. So if it says the 7th, like here on the 7th, it actually, and that's on the close, so it actually reversed first. But this, if you think about it, this was called in advance. These were all called in advance, which is pretty good. So I'm aligning this red arrow with the purple arrow, which is the Fed and the cycle. So why did I get out early on this position? Well, because I also run this, I run an RSI analysis down here. And so this is really kind of fine tuning stuff here. But I see that when it gets to 91, that tends to be a reversal point for silver. So on the day before this, it got up to like 88, something like into there when I got out. So I figured that was close enough to 91. It did go up one more day. It actually hit 91, and then that was the end of the uptrend. So you can see that this is really like a layered approach that I do. First, I'm looking at the Fed juice. Then I'm looking for some type of a cycle to go with it, in this case, the cat. And then I'm maybe looking to do some fine tuning, which there's all different ways. There's very many ways we can do fine tuning. We can do ultra short cycles, day of the week. There's all these different ways we can tune something out. But when you have a run like this, it's essentially running up on every single day of the fine tuning event. So the only thing that I was really worried about in this case was the 91 hitting there. Okay. So if we look at gold here, it's a very similar story. Fed juice standalone here. It was a buy there, it was a sell there, it was a buy here, it was a sell here, it was a buy here. It stayed buy all the way up into here. It sold here, lost money there. I was losing track there. Okay, bought into here, made money, sold for one day, and then it's been up ever since. So, the Fed juice, it's like I said, it's standalone, long-term moves. If you can stomach it, it's long-term moves with the Fed. Now, a lot of people don't want to sit there for weeks and weeks in a position, and there's risk too. I mean, this Fed juice does not use stops, okay? It's a flow of the market. So there's risk there. You got to define your risk, because if you have a situation with a fast-moving market, let's say like oil, right? And let's say that it moves so fast that the Fed juice can't keep up with it, that you got to have some type of a protection there. Like oil went negative, right? There's nothing to protect against that. So if you didn't have a stop, if you were long on that oil crash, then it was really bad. So just that's a downside of the Fed juice. There's no stop into there. It's just a flow of energy from the Fed to the market. And then of course you can have very big single day moves against it, even if it's in a buy, because this is such a long-term indicator. Okay. But it was a similar concept here with the gold. Um, I actually saw something I liked a little bit before 8-1. So this is when I liked that position into there, and it got all the way up to almost to its RSI peak. RSI peak is 96. The day before it was 95, so I figured that was enough. When it got to 95.8 right here, that was the end of it. It dumped. You can see it right there. So that's just kind of giving you an idea of how I'm determining what is a decent position or not to take in terms of an advantage. To get a Fed advantage, I want to be looking at the Fed juice, okay? And then I want to, in this case, the metals, I want to be looking at the cat because it's trending so hard. I mean, look how the cat did, guys. Look at this. This is incredible. This was all called before the month. This is all, this wasn't back dated or back stamped on the chart. This stuff was published at the beginning of each month with the cat files. So this stuff this was amazing. I do find when you get runs like this that they tend to follow the astro a lot better when things get emotional like this. Now, if you're in a choppy situation like this, it can be a little bit tougher to deal with the cat, even though it did do okay into here. Um, Sometimes I might look into some much more fine-tuned events into there when you're talking about that. So that's the basic idea there. So that's how I'm talking about looking at, um, the order of sequences that I look at. So when I go back to look at a closing bell and I'm looking for an advantage, uh, it needs to show up here. I need to be showing something there and say, hey, there's no advantage right now. You see that they're all in conflict into here. So, you know, I make some comments over here on the side. I might say, look, copper up, I've been saying this for a while. Copper uptrend probably ended on July the 13th. Strong move lower today. But if the S&P rallies, then copper will have trouble going much lower. So I really believe that if the S&P continues higher, that copper is going to have trouble going down because they tend to move together. It made some comments about those RSI turning points here. So that's the idea there. So right now, I just don't have really anything going. Now, for some of you who have an itchy trigger finger that always want to be trading all the time, I do have a new section in here called Go Mode, which I will talk about. It's talking about very short-term cycles. This is dealing with microcycles. This is dealing with days of the week. So if you want to just if you're just looking for like 1 day quick in and out type of trades, I'm putting this new Go Mode here. And when they show up, you're lining up some very short-term plays. Okay, so like silver is a buy on Monday on the Go Mode, right? So that's lining up a microcycle with RSI. So, but it has nothing to do with the Fed. This is just like for those of you who want that ultra aggressive trade, this is another way just to look at the market on the short term. So that's the idea with that. Um, and I put the days of the week here, which we'll get into that in another video, but that's more just like fine tuning stuff. And then I put the cat signal into there. So you can see, like, for example, on copper, it hit that peak almost perfect and it just started to do this decline into here. So, I mean, that has a very different look than the S&P does, but they generally tend to track each other across the long period of time. So, I think that the cat, like the reason I put the cat here is because this way you can look at the Fed juice, and then you can see what the cat is going to project out into the future. And I try to align those. So we'll see what happens like on copper if the Fed juice even does go into a buy. I don't know if it even is, but right now it doesn't want to. And the Fed juice is a weird thing. Like it'll absorb a lot of energy and not change direction. It's really strange the way that this works. Like you would think that if you were looking at like a trend following system like a MACD or something, that a move like this would change the trend. Well, the Fed juice isn't like that. The Fed juice is looking at what the Fed is doing and it's looking how the market is reacting. So for example, if one of them is outpacing the other, it may not turn. So here you go right here. Now this looks like it's trying to hook down, but it did not go into a sell yet. It might, it's very possible. If I had to tell you what I thought on gold, probably These are going to try to pull back, and so you've got about a week here where it's saying it wants to pull back, and then you got to run up into you got this run up into the seasonal peak, which is coming up. So that's the idea there. So that's the idea of lining things up, and the same rules apply for gold, silver, copper, S&P, corn, natural gas. I mean, it's all the same thing. Like even like corn here, corn has had these series of these little one-day trades that have been very successful. It's like 9 out of the last 10 trades have been successes. I numbered these here, but these have been very small trades. But you can see here that when you look at the or advantages, I'll call them advantages, not trades. But you can see here, this was a choppy action into here, right? There's not really much, but you can see that all of these trades were with the Fed juice, or all these advantages were with the Fed juice. So all these were like little 1 or 2 day long trades. You see that into there? So that's the idea there, that you're trying to go with it. You see even here, the Fed juices is in a buy here. So I'm looking for a long type of an entry here. Okay. And so this lined up. So you see the cat here, the cat with the Fed. So they lined up here. So the same thing goes back here. If you go back and look at corn here, you can see that what was I lining up? Well, here's the cat here, and the Fed juice is up. So here's your position, right? Here's the cat, Fed juice is up. Here's your position. Okay. So the idea is that you are lining up. Here's the cat, here's the Fed juice, here's the position. So you're lining up those two energies to have the most success. Now, in a situation like this with the corn, okay, I might go a step further. If it's in a choppy range like this, I might go a step further and start looking at those day of the week statistics, right? So I might see like, and then the first layer, Fed juice, right? Okay, well, Fed juice up. Okay, great. Cat up, great. And then this might have been whatever, Monday or Tuesday, and that's a strong day of the week to trade. So then I might put that extra layer into there. So, and that's why these trades came out so good on corn, because I'm lining up these highest probability trades. I mean, there was one loser into here. That was a very small losing day into there. But, the idea is that most of these trades were very high probability successes because I take the time to make sure everything is going in the right direction. So, you know, there's a risk when you have too many indicators that you can just end up not knowing what to do. But the point of this is, what I want to point out to you is there's a recruitment sequence. And when I say recruitment sequence, it's just the order that you follow. So the first thing I look at typically is the Fed juice. Okay, so right now, like this is a downtrend here, this is an uptrend here, etc. Okay, that's the first recruitment sequence. The second recruitment sequence I typically look at is the cat here. Okay, here's your cat. And then I might look at a third layer. I might look at RSI down here, right? So like corn is in this RSI buy right here. Fed juice is up. So, you know, there's a possibility that corn could be, trying to go up Monday. It's possible. The cat's not with it, but there's some other things here that are showing that it could be trying to go up. So it's not necessarily the cat with the Fed juice, but most of the time it is. Most of the time I'm going Fed juice, cat, and then I'm looking for something else. If I see something that goes with the Fed juice that's really, really stands out, that goes against the cat, I might consider that too. But the point is that we want to be with the Fed juice. That's the whole point. And so I hope that that makes this a little more clear in terms of seeing how to position these trades. And then I'm going to be summarizing them on that homepage that you guys get, so you can see specifically, what I'm just saying for the day, what I think an advantage is. If there's nothing there, then I'm essentially saying I don't think there's an advantage right now. So like on these metals right now, I just don't see anything. If you want to be ultra aggressive, there's that go mode buy signal on Monday, but that's that's just if you're ultra aggressive. You are lining up some very, very short term cycles and pressure on the markets. That could be like 1 day moves. But in terms of the bigger moves, I just don't see anything right now in the metals. So hopefully that answers your question. I'm going to be posting more videos like this to clarify this situation in the future.